Hey everyone, welcome back to Corporate Decoder. Paradise Acquisition Corp, APADU just filed an 8K announcing a business combination and plans to delist from Nasdaq, and I am seeing a common pattern here. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is mostly about moving exchanges, but it hints at a much bigger shift for the company. And for investors, that is usually a mixed bag. So APADU, or a Paradise Acquisition Corp, as they're formally known, is a special purpose acquisition company, or SPAC. You can think of them as a blank check company formed to merge with another company. In this case, they're merging with Enhanced Limited. This merger is called a business combination. Now, the big news is that they plan to voluntarily delist their units, Class A ordinary shares and rights from the Nasdaq stock market. This is happening because after the business combination closes, the new company Enhanced Group Inc. is expected to start trading on the New York Stock Exchange. This is pretty standard for SPACs after they find a company to merge with. They usually move to a more established exchange like the NYSE. The plan is for trading on the NYSE to begin around May 8th, 2026 under the symbol ENHA. The last day to trade on Nasdaq is expected to be May 7th. It is important to remember that delisting from Nasdaq and listing on the NYSE are both subject to the business combination actually closing and meeting all the NYSE's requirements. This means the deal is not a done deal yet. A Paradise Acquisition Corp is also calling itself an emerging growth company. This means they get to follow some slightly less strict rules from the SEC, especially when it comes to reporting financial information. It is a common designation for newer companies. This section is basically the official announcement of the delisting from Nasdaq. It confirms what we just discussed, that the move to the NYSE is tied to the completion of the business combination with Enhanced Limited. The reasoning is pretty straightforward. They are merging into Enhanced Ltd, and the combined entity will be listed on the NYSE. This is a common strategy where a SPAC merges with a company and then the new combined company lists on a major exchange. It helps with visibility and liquidity. This part tells us that the information about the delisting is being announced widely, which is required to make sure all investors have the same information at the same time. They've also attached press releases as exhibits to this filing to share more details about the announcement. This mention of an extraordinary general meeting is where shareholders will vote on the business combination. It is a key step before the deal can be finalized. This is a really important section. They're telling investors that this report isn't an offer to buy or sell anything. Instead, it is about a proposed merger. They have filed something called a registration statement. Think of this as a disclosure document that contains a prospectus, which is like a selling document, and a proxy statement, which is used for shareholder voting. They are urging investors to read these documents carefully because they contain vital information about the merger. This is a standard legal disclaimer. It means that just because they filed these documents, it does not mean the government or any regulatory body has given their stamp of approval to the deal itself. They are just facilitating the disclosure process. They are basically saying that if you see a link to a website in this report, the information on that website is not officially part of this filing. This is to avoid confusion and ensure that the official SEC filing is the primary source of information. This section identifies who might be trying to persuade shareholders to vote for or against the merger. It includes the directors and executives of both Enhanced Limited and a Paradise Acquisition Corp. They are pointing shareholders to the registration statement for more details on these individuals and their interests. This is a critical part of almost every SEC filing. It is a massive disclaimer about future expectations. They are pretty much saying we're talking about what we hope will happen, but a lot of things could go wrong and actual results might be very different. They list a whole bunch of risks, from regulatory approvals to the success of Enhanced business model itself. This is where you see the real uncertainties. They explicitly mention Enhanced unproven business model, limited operating history, and minimal revenue to date. This is a huge red flag for any company, especially one in a highly regulated and scrutinized area like performance enhancement. They also list concerns about financing, regulatory scrutiny, competition, and even things like changes in sports governing bodies' rules. It sounds like they are trying to cover all their bases. This section just lists the exhibits attached to the filing. The most important ones here are the press releases from the 27th of April 2026. These will contain more details about the business combination and the reasons behind the delisting. Exhibit 99.1 is the press release announcing the voluntary delisting from Nasdaq. This is essentially the public announcement that goes along with the official SEC filing. Exhibit 99.2 is a joint press release from both the Paradise and Enhanced. This likely contains more details about the business combination itself, the expected synergies, and the vision for the combined company. This is where you'd usually find the more optimistic spin. This is the date the report was signed, which is consistent with the filing date. And here we have the signature from Claudius Sang, who is listed as the Chief Executive Officer and Chief Financial Officer. This shows who is officially on the record for this filing. Looking at this filing, it is pretty clear this is a SPAC moving through its typical process of merging with the target company and switching exchanges. However, the forward-looking statement section really highlights the speculative nature of this deal, mentioning an unproven business model, limited operating history, and minimal revenue to date. For Enhanced Limited is a significant concern. Historically, companies with such profiles, especially those coming out of SPACs, face immense challenges in achieving profitability and sustainability. We saw a similar pattern with companies like Paradise Acquisition Corp, the FAST, where the target struggled to gain traction post-merger, leading to significant shareholder value destruction. The risk here is that the move to the NYSE might be a stepping stone, but the real test will be whether Enhanced Limited can actually deliver on its promises and overcome the inherent risks they themselves have outlined. The key factor to watch will be the performance and market reception of the 2026 Enhanced Games and any subsequent revenue streams. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.